Got there with you, Eric.
Let me pin you here.
I
Great.
think you can spotlight him too for everyone. Back to the image. Oh, you did it.
Okay.
Karen, do you want me to get started with a few words of intro?
Yes, please, Eric. Thank you.
Absolutely. Well, I'm very excited we got to pull this lunch and learn together, particularly in the short time that it came together. And this is Christian Zimmerman, who is one of the co-founders of Qoins. And for everyone's benefit on the call, Qoins is one of the newest portfolio companies in Vested Ventures. We finalized our investment at the beginning of the year. So what you're going to begin to see from a Vested Ventures perspective is a little bit of publicity coming out about our investment, and we'll be talking a little bit more about some of the Qoins initiatives coming up as well. We're really excited about this investment, and Christian's going to walk us through a little bit about what Qoins is and just kind of the personal journey that's brought Qoins to life. What we really love about it is the mission that it's on. And that mission is to help people pay down debt through some simple rounding technologies that they can use in their everyday spending. And we really like to focus on minority and underserved communities. Christian will talk a little bit about this, I'm sure. Your mother is El Salvadorian, right, Christian?
Yes.
Yes.
Exactly.
Coming from that background, Central American background, and they're based in Atlanta. So obviously very strong communities there. And so we're excited to support that. And with that, I turn it over to Karen and Christian to walk us through a little bit more about Qoins.
Yeah, thanks so much, Eric. Go back to enjoying your vacation.
And Encanto.
And Encanto, yes, exactly. Okay.
Bye-bye. Hey,
Hey,
Christian,
everyone.
thank you so
Hey,
much
Karen.
for joining us today. I
Yeah,
appreciate
absolutely.
you jumping in last minute. Christian's co-founder was supposed to be joining us today, but he unfortunately was not able to make it. So Christian jumped in to help us himself. So just to start off, why don't you tell us a little bit about Qoins and I guess what, just a brief overview of how it works and what it does, and I guess why you thought it was needed in the marketplace.
Yeah, absolutely. Hey, everyone. My name is Christian. I'm co-founder and CEO of Qoins. As Karen mentioned, my co-founder Nate was supposed to be on, but unfortunately had some family emergencies. But with that being said, our company Qoins, we started back in 2016 after I graduated from Georgia State University here in Atlanta. I had studied business management. Nate had actually also gone to Georgia State University as well, but he's 2 years older than me, so we never actually met in college. And so me being Latino, first one in my family to go to college, first one to graduate, so kind of had like all these stakes that was expected out of me to not drop out or not miss any of my graduation date. I told my mom I would do whatever it takes. So that being said, I took out obviously some student loans, which most of us typically do, but I also had taken out some personal loans as well to kind of make ends meet on the second to last year of college. And so fast forward, we graduate, and I'm working at a startup, and everyone has ideas. When you're working at startups, you're sharing these ideas with your colleagues. And I had to come up with this idea for Qoins. At the time, it was called Consolidet, and a terrible name. And there was this pitch competition, and my nickname at the other startup, which was like not even fintech focused, was The Plug. I don't know if you guys like hip hop. 2 Chainz is really popular in Atlanta. He had this song called The Plug. Anyways, that was my nickname. And so this pitch competition is called the same thing. And one of my coworkers was like, "Hey, you should totally apply. Like, what's the worst that can happen? You have this idea." So I applied. I had to build like a quick MVP to just showcase like what the product did. So we did a Fiverr video for like $35, an unbounced landing page for free, and a Google Sheets to capture the waiting list. And with that, we made top 10 for a $100,000 pitch competition. So I was a little mind blown. Didn't know that was an opportunity or a possibility. Long story short, I didn't win, but it made me want to kind of just continue to pursue this idea and see if there was any legs to it. And so shortly after that, I hadn't met Nate at the time yet, but started going to networking events, co-founder meetups, developer meetups, just putting myself out there, and was able to meet Nate at a co-founders networking event. He was actually trying to sell his services to me. I said, no, I don't want to code. But yeah, the premise of Coins at the time was, how do we help consumers focus less on like asset-based savings and more on the liabilities? Like, do you have debts, which many of us do, but how do we automate the habit of paying down those debts faster without having to think about it? And so for us, we believe like the three pillars of personal finance is automation, education, and recommendation. And so we solely focus on the automation piece to give our customers the ability to choose a goal. Like, what is it you want to do? Is it pay off debt? Is it save money? Select how you want to save throughout the month, right? As Eric mentioned, rounding up is a very popular method, right? Every purchase you make, it's rounded up to the next dollar. Is it payroll deductions? Is it weekly deposits? Is it algorithmic savings based on an aggressiveness level? And then lastly, if you're paying off a debt, like, where do you want that money to go? Who's the lender that you're trying to pay down? And we worked with credit cards, student loans, auto loans, mortgages, really the whole gambit. But do it in a way that whole process is once you do it, is this kind of a set it, forget it. We manage the whole process of setting the money aside throughout the month, but also facilitating the payment on behalf of the customer to the lender. So I think that was like my long-winded intro, but yeah.
That's a great explanation. So thank you. So you kind of went into a little bit about your background, and I guess, how did that influence the founding of Qoins and its mission?
Yeah, so for myself, it's funny, prior to Coins, I've always wanted to do my own thing. I knew that ultimately I would start my own company at some point. I didn't think it was gonna be technology, but I think the biggest thing that resonated with me, I'm an only child, so like obviously a mama's boy. And my mom was always like, "Hey, like, do something that's going to create positive impact in people's lives." And so this kind of like stuck with me in thinking about, like, if I'm going to do something, what can I do that is going to kind of hit that notion? And they really liked the idea behind what we were doing, the mission behind Coins. And so that's kind of like why I pursued it. And same thing with Nate. Nate had started quite a few other startups in the past. And I think his idea of Coins resonated really well with what I was trying to achieve. And we were able to work really well together because we had kind of this tenacity, this drive to want to solve this problem, but also do whatever it takes to kind of keep going and pushing it to its limits.
Mm-hmm. That's great. So there are other apps in the marketplace like Bright Money or Change that also help people pay down debt. How is Qoins different in its mission, or it just in functionality?
Yeah, so for us, we typically, so most of the other products are primarily focused on a one debt type. So whether it's credit cards or whether it's student loans or just like those two, we learned early on that like our customers want all of the different types of debt, specifically in one place. So that was one thing that we kind of took feedback from our earlier customers. But I would say the biggest difference again is the aspect of the very simple principle is like putting more towards what you owe to pay it down faster. And our customer demographics may kind of overlay with one another, but it's less about optimizing to make your monthly minimum and more about optimizing on paying down more towards the principal every month to lower the interest rate, the overall balance, and the overall time it takes to pay down the debt. I think that's really where we differentiate ourselves heavily. And it's a very simple rule. It may not be easy, but it is a simple fundamental rule that, to get out of debt, you got to pay a little bit more than what you owe than just what the monthly minimum is.
Yeah. Okay, great. So who are you targeting with this app? I guess, who are your primary users, and not just primary users, but who are your ideal users?
Yes. I mean, people I'm 28. Well, yeah, I'm 28 right now. I'll be 29 in in a month, but listen, I'm already forgetting how old I am, but 25 to 34 is like our sweet spot. That's our target demographic. And what we've found was that it's just, within that age range, you either really go with your money or you're not. And those that may not be, or are looking to like build principles around their personal finance, are getting married, they're having kids, they're buying their first home, they're starting their career. They're getting more money than they expected and spending it all on going out with friends or clothes or whatnot. And so it's at around that age that we're trying to like also start building out our financial literacy, building a better financial habit. yeah, that's like our target demographic, middle class, lower to middle class income. Like we've seen really like the full scope customers that, say, hey, I feel like I'm too deep in debt and I can't manage myself. I am bringing in some income, but I'm just bad with money. And we have like the other side where we deal with customers, and this is a little tougher for us where we are like then kind of giving other recommendations, but customers that may be like, hey, I have $50,000 worth of debt, of credit card debt, and I really don't think I can solve this myself. I do need some like debt consolidation or debt refinancing or a debt management plan. And so we partnered up with like nonprofits to help you to help serve those customers. But particularly is like 25, 34 age range.
That's great. So you just mentioned that you partner with other kind of debt consolidators, things like that. But what else are you doing to help people learn financial literacy, not just paying down their debt?
Yeah, I'm trying to be an influencer myself. I'm joking. We do a lot of the content. We do a lot of the content in-house. We started off a long time ago doing like what's called like Tip Tuesdays. And that has now kind of like moved into like the TikTok realm where we're trying to just give out free information. We have like calendars, we have planners, we have like free tools that we're giving the customers when they're first signing up. And again, a lot of these are more like informational based, educational based, like manually based. But again, I think the fundamentals of like getting into automation, education, and the recommendation piece is first knowing like where you truly are. And so that's really where we try to help serve the most for our customers. And then again, the other piece, as you mentioned, like we'll have affiliates or partners that we are complementary to what we're already doing to help you save money in other ways. I think the biggest thing is that we're going to be able to help our customers save and pay off debt in other ways is like the launch of our debit card, which comes out end of next month, which we're very excited about. And like that is a new way for us to showcase, hey, your debit card can work for you, and it doesn't have to be a credit card to help like earn points or help have some additional value to help you achieve some financial goal that you may have, such as paying off debt.
Mm-hmm. You mentioned that you're on TikTok, and I guess all of us as marketers are I'm always curious about what other people do for their marketing. I guess what have you seen as the most successful vehicle for driving traffic to your app and for customer acquisition?
Yeah, from a digital perspective, obviously like social media like is really, but non-digital like affiliate partnerships. So as I mentioned, we partnered up with like debt consolidators and debt refinance programs. Most of them are nonprofits, and like that's been like a big lead gen for us, because again, there's two types of customers: those that feel like they're too underwater, and those that feel like they're underwater but they really aren't and do have the funds and the means of actually like managing it, but they just kind of need that foundation. And a lot of those customers go to the debt consolidator saying, hey, I need help and I think this is the only way I can help, but they have a threshold of at least $10,000 or more that that they can actually serve that customer. If they don't meet that criteria, they're not able to serve them. And that's where we come in. We'll say, okay, well, if they don't meet that criteria, they definitely meet our criteria, and we want to help those customers, and we'll pay you for those customers. And so that's been a great lead gen for us.
Is there a minimum amount of debt that you typically require a customer to have, or could it be $100?
Yeah, no, there's no minimum requirement. I mean, more than anything, like we've had, customers have a few $100 to customers that have, a few thousand, more than a few thousand. We've had doctors, paying off their student loans. They have tens of thousands, but then you have customers that are, just more so just kind of find something to help them build those habits a little bit better. So again, we kind of serve a large gamut, but again, the main focus is, okay, if you have debts, like, can we build trust there? And by building trust there, then we can kind of move along that journey with the customer around their personal finances.
That's great. So going off in a little bit different direction, you said that, debt actually disproportionately affects minorities. How do you feel that your experience as a minority and your co-founders has helped you kind of shape the app and the messaging around it and even functionality just to make it more accessible?
I think the biggest thing is like being true to our story, like being ourselves through the whole process. I think the idea of financial wealth and financial health are two very important things, but we've focused primarily on financial wealth. But in order to get there, you have to have a sense of financial health. And so that's really what we try to like convey and showcase and help our consumers with more than anything. And again, like with the media side, like I do try to be like as open and out there as I can, because I am Latino. I am able to share my story, and I am like very transparent about like, where I came from, the mistakes that I have made that many people make or just like not willing to share, and kind of the journey that I'm taking really with my customers in becoming debt free, in achieving the goals that I want financially. And I think that's really where, from a competitive standpoint, you can't really compete because it's our own story, and it's really like a true testament of like where we came from. And then from Nate's standpoint, right, like the when we think about like access to capital within like starting a business, that in itself is a whole different story, but it still kind of stems to that same notion of like access to capital or access to education around financial literacy is a bit difficult. So we're just trying to give that as much information out as we can.
That's great. And what has your experience been as a minority entrepreneur?
It has been really exciting. I think what's the phrase? The everything you do is going to be like, you have to do like 10 times more to get the same results. But I think at the same time, because, Nate and I are minorities, one, I try not to like think about it too much, but I think that obviously it's still there. But regardless, me being Latino, like my mom wakes up at like 4 a.m. every day still, like has been doing it for like 25 years, to go to work. And for the longest time, she's working like 2 jobs. She doesn't even need to, but she just likes to work. But that same work ethic, I think has been instilled in the both of us to just say, hey, like, you do whatever it takes, you find solutions to a problem. There's really not anything that can stop you from achieving what it is you want to achieve if you put the work in and you are persistent and you are resilient. And those are, I think, some key attributes as a minority leader, as a minority like founder, to keep going farther than like what is expected. Because I think some people may think like, hey, like if you have failures or if you're not hitting your marks or you're getting hit by a pandemic, that you just quit and you stop doing what you're doing, and it just wasn't the right business. But for us, it's like, we like believe that like we're gonna do whatever it takes, and like if we fall on our own sword, fine. But like I'd rather fall on my own sword than fall on the sword of like other aspects of life that I have no control over.
That's a great way to put it. So you just got some funding from Vested Ventures. I guess, what do you hope to do with this investment, and any others that you're currently getting?
Yeah, no, I obviously one, like very excited to be working with you guys, have you guys as investors. I think the biggest thing is, we're launching our debit card. So like being able to promote it and market it, and get it out to the masses is really important. And I think that's really where a lot of the capital is going to be used for, like marketing and production. So our team as a whole has been pretty small up until like last year, when we started to beef it up on the contractor side. But now we're starting to really bring in like full-time engineers, know what they're doing, have been in the fintech space. And quite honestly, that's been like aside from marketing, have been like one of the more difficult things is just, acquiring talent. Also given like the pandemic, people are living in like, Colombia, and they still want New York salary or SF salary.
Exactly.
So like things like that, everything is changing. But that's the 2 primary things that we're focusing on. So, how do we get the word out about Qoins? How do we continue to drive conversions? How do we continue to grow our customer base while also creating like a really strong product that's like hopefully 10x better than what else is out there?
Yeah, that's great. So, okay, that leads to my next question. What are your goals then for the rest of 2022 and 2023?
Yeah, goals. We try to do this like the end of every year, preparing for the new year. And so for like, I have a big whiteboard right here that I look at every day.
Nice.
And it's specifically like we want to try to hit $1 million in ARR in revenue this year. Like obviously the pandemic and even like post pandemic, like a lot of this year was still somewhat like affected by some of these, people not just being stuck at home and not spending, or like, the debts not necessarily being where they were, or government coming in and saying, hey, you don't have to pay off your debts, specifically student loans, right? So that's stuff that way we've been really affected by. But when you're coming on the other side of it, that there was going to be a lot of opportunity as well, and the conversation around this was going to be even bigger than it ever was. And so that's really where we think the growth of our revenue will kind of coincide with. But again, it's also like, hey, are we offering new solutions that are helping our customers like thrive? And that's like our biggest goal this year was like, can we get this card launched? Can we get it in the hands of customers? And how do we help drive both more value for the customer, but also more revenue? Because the debit card for us is also a huge revenue driver because it's not anything cost to the customer per se, and more on the back end, like the merchants and like the contracts we have like with Visa is like where we're able to make our money. And then on the customer side is like, how do we get our customer base growing, at a much larger like pace.
Got it. Okay, those are all the questions I have. If it's okay with you, we're going to open it up to Q&A from the audience. If anybody has any
let's do it.
Want to pop it into the chat? Anyone?
Or you can just like ask, like he was on mute.
Shout it out.
Well, my job here is done. I'm just kidding.
I guess we got a pretty thorough explanation. Not too many questions.
Short and sweet.
Yeah, no, that was great. Oh,
there we go.
Okay, here we go. Okay, how do you plan to market the card?
Yeah, so our tagline that we're using is like the debit card that pays off, the first debit card that pays off your debt. And so we're going to take like a three-pronged approach to marketing the card. One, obviously, our current customers, when someone signs up, we already have built in like the automation behind it, but like to upsell or to show more value for like what we're already doing, this is obviously an extension of that. So telling our customers, hey, do you have a small credit union that like you're not able to have these saving tools? There's one way. Hey, do you have the other way is like, hey, every time you go shopping, like you're buying groceries, you're buying gas, you're buying coffee, things that you have to do. Why not have those merchants offer you like a sense of like cash back or like money towards a specific goal that you have selected? So working with merchants to actually market it themselves and give a sense of like corporate social responsibility. And then the third piece is like the cash back, I guess, quote unquote, from Qoins, like marketing to the outside world. I know we're competing with a lot of different people that have cards already. But again, everything's focused on asset-based savings, investments. We want to still focus in on our customers saying, hey, like every time you swipe, you're paying off your debt, you're swiping off your debt. And that's really like what we're trying to portray. But really good question. I think we've also like, again, that our card is Visa, which is we're excited about. So we're actually able to get some marketing dollars from Visa, and we'll be working closely with them to actually market it out to the world as well, or to the US.
Great. That's great. We have another question. As an entrepreneur, what's the first step when you're starting a new business?
The first step, I would say, is well, when you're starting a business in general, like I think the first thing people think about is, oh, like let me just put money towards this and like it'll just figure itself out. But really, you need to validate the idea or whatever it is like your business is. Like the first thing I tried to do was like I didn't even like tell my friends. I just went and tried to get like random people to like join the wait list. And that helped me validate like, okay, that's the first step. There's a need or there's a want for a product like this. Next is, are there people willing to pay for this? Or like, what is the intrinsic value that I'm creating for both my customers or whoever I think is going to like buy the product? Those are like the two big questions that I'm asking. And then I think the third is more like of an internal thing. Like when you're starting a business, my experience was like, there's a lot of risk you're taking. Like I think you have to understand like who you are personally to be able to make the jump or to be able to like just like take that leap and focus on that business full time because there's going to be a lot of like deterrence. There's going to be a lot of hurdles that you have to get over. And if you know what your risk appetite is for making those decisions, then it makes your job a little bit easier. It's not going to be easy, but it's gonna be a little bit easier.
Right. Here's another question. Knowing what you know now from experience, is there anything you would have done differently when you were first starting out?
Yes and no. I mean, like, I think at the end of the day, like, my path is the path I took. So I learned from everything. So I try to always keep that type of mindset. Like at the end of the day, like if I didn't fail, and I haven't failed, then it's all a learning process. But if I could go back and like whenever I do like another business, like I do feel like the steps to like moving faster, I think I can do at a much better pace. So I think part of it is like organizing and planning out things more effectively. I'm very much like a go, 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 go. I want to move like 100 miles per hour. But sometimes if you are able to organize things a little better, plan it out, one, you're going to have like a better picture of like where it is you're trying to go. And I think that is important to help you kind of keep giving you like that guidance to where it is you're moving forward towards.
Yeah. And does it help having a co-founder? I'm guessing you guys complement each other with different skill sets.
Oh, absolutely. Like I think some people say like, they prefer doing things themselves. I think in technology, like it's a little difficult. Like I would have never done this by myself. I knew immediately like I couldn't do this by myself. So I need someone that's going to complement my skill sets, and if you were to do it yourself, like, again, it's all about understanding like what you're not good at and finding like either the resources or the talent that can help mitigate some of that.
I'm curious, what's the average that a customer is able to put towards their debt a year using your service now?
A year?
Or if you, whatever stats you have, I'm just curious, like.
Yeah, so like it depends on which saving method someone chooses. So like rounding up purchases, someone saving anywhere between like $50 and $60 a month, just off of purchases that are being rounded up. And again, like the caveat there is someone can round up whole dollars if they want, but they don't have to. Smart savings, which is like similar to rounding up, but it's not based on transactions or purchases and more on like, hey, I want to set aside a threshold of an aggressiveness level, $1.50 to $3, $3 to $5, or $0 to $1.50. So low, moderate, and very aggressive. And that one, customers are saving roughly $75 to $100. And then we have weekly deposits and payroll deductions. Weekly deposits is closer to like $150, $200. And then payroll deposits, because you can do percentage amounts or whole dollars, are closer to like $200 to $250. So it really depends on, like, again, like we try to give the customer like a range for an appetite on how aggressively they want to tackle these debts. For someone that's typically just getting started, the rounding up is like a very easy one to just kind of like set it and forget it. For those that are more like budget oriented and they want to know exactly like how much money is coming out every week, like weekly deposits and payroll deductions, a little bit better.
In that same vein, do you have any really great success stories or testimonials from customers like, oh, I saved $500 in the first month and was able to pay down a credit card debt, or something along those lines that you've heard from anecdotal evidence from customers?
Yeah, so I mentioned like we had that one doctor. This one doctor, like he had like over $100,000 in student loans, and he had, at the time, we could have like more than like 2 different goals set up at any given time. So he had like 10 of them, and he's paid off over like $12,000 since he's signed up. And he's like, oh yeah, I don't even open the app sometimes. I just know it's working in the background. And it's so nice knowing that like I'm just shaving off years off of my loan. And he still makes his monthly minimum, but that's obviously like one great example. But that's on the student loan side. Like on the credit card side, like we've helped customers pay off their debts like in half the time, just off of like making double their monthly minimums. Because like monthly minimums for on average are like $50 to $75. 35, is I think what mine is. But if we're averaging 50 plus, like that's doubling down on that debt already.
Yep. That's great. Are there any other questions?
Hi, Christian. I have a quick question. I'm just wondering, what is the biggest barrier to entry for your customers that you see?
For our customers, like from like using our product,
Yeah,
or
enter the platform. It's a paid
The-
service. These people are in debt.
Yeah.
Like, is there something along those lines that you have to kind of address, or?
No, for sure. I think the paid service can be hit or miss. Like on one aspect, someone that is willing to get their what's the phrase get their hands dirty or like make a commitment to a specific goal by paying for it. For example, like financial coaching, you're paying someone to tell you pretty much what to do. But if you're paying for it, you're more than the likelihood of you actually achieving the goal is much higher. So there's that customer. But then there's the very like price sensitive customer that says, oh, like why am I paying when I'm trying to pay off my debt? And so that's a question we get asked about a lot. And again, we typically point towards, well, we're here to help you. Like we're not trying to like necessarily, we're not a nonprofit. So first of all, and then second of all, like we do have a lot of resources and tools to help kind of make this process for you easier. So I would say like that's the biggest one. The second one is really around the lending, the payment itself. So like when I first started, like, and this is still a big pain point across like I think all the incumbents, is that you have to log in to each and every single one of your lenders to add it. And so like I don't even know half my passwords for like my loans. Like I just have it saved and like I have my monthly minimum set up, right? So if you're asking me to then log in, I'm like, I don't know. I'll just add one and then like we'll go
Right.
from there. And that's something that we've been trying to work on and addressing. And that's what's going to be addressed after we launch a debit card, to offer like a one-time input, and we pull the full credit report, full balances, monthly minimums, like payment due dates, all that. So you only do it one time. And that's something that we were super excited about. But that's been like a big one.
Oh, that's great.
Thank you.
Yeah, definitely.
These are all really great questions. Is anybody else? No? Going once?
How soon can we sign up for the card?
Yeah, that's it. Actually, that's a great question. How soon can we sign up for the debit card?
Yeah, so you can sign up now. Well, you can sign up for the wait list now. It's on our website, qoins.com, and you'll see like a tab called the Qoins card, and you'll be able to sign up there. And so you get all the notifications when we go live. We plan on officially launching the card next month. So we're just going through kind of like the approval process with our new bank, with Visa, to get everything kind of buttoned up before we kind of are able to go fully live to all customers. But again, we're trying to continue to grow the wait list. We're trying to continue to like kind of grow the awareness around what we're doing. So you can definitely go ahead and sign up for that now.
That's wonderful. Great. I'm sure a lot of people in the audience will do that. Thank you so much, Christian. I really appreciate your time and I appreciate you jumping in today. And thank you everybody else for joining.
Thank you.
Yeah. Thank you, everyone. Nice meeting you all.
Nice meeting you too.